What's up guys, it's Sam here from Market Movers, and today I'm going to get into a video about a lot of stocks that are down an awful lot from their 52-week highs, and we can actually find some proper opportunities in the market at the moment. These stocks are standing out right now as potential money makers for people because they're so far down from where they were. This is not even looking at normal market moves like down 10, 20%. Some of these are down 40, 60%. Even 80%, and these are some of the opportunities that I've identified that I think are potentially money makers in the future. So guys, without further ado, make sure you do hit the like button, hit the subscribe button. It does help us out an awful lot. And do check out our sponsors of Caffe Pompeii and also 35mm vintage. All them links are down in the description. And look guys, I hope you do enjoy this video. Remember, this is not financial advice at all. These are just my opinion and where I think there are some opportunities in the market. So I'm going to get into 6 stocks that I think there's potentially opportunities right now. So guys, the first stock that I want to mention is PayPal. So if you are following the stock market at all, you've definitely seen that PayPal is down massively from its 52-week high. So it went up to around 310 and is now trading at around the 120 zone. So there's a couple of reasons for this. Basically, they kind of had stifled growth forecast for the year coming, but they did increase very, very well over 2021, and obviously they have like the Venmo app, which is crazy. They have PayPal, the normal app. They're also getting exposure to cryptocurrencies as well. They also, over $1.25 trillion in transactions last year, which is absolutely crazy. So this stock, I think, it's a phenomenal company, and it's now trading at like nearly an acceptable level where it's now worth the risk. Buying PayPal at around 300 a share is just, it was not worth it at all. You're talking about PE of over 60, but now it's trading at I think it's a PE of around 30 and a forward PE of 25. So PayPal is a company that has a lot of growth ahead of it in the next few years, especially as the transition away from eBay comes more into fruition over the next I think it's Q3, when they think that the PayPal transition will be finished. PayPal transition from eBay will be finished. So that's also been holding back revenue as well as that gets done. So once that's done, they don't think there'll be any impacts to revenue from that. So that's absolutely a positive as well. It's trading at a very good valuation in my eyes for the growth that it has ahead of it, and it's definitely one to consider. It's not going anywhere. So that just brings me on to number 2, which is Block Square. It's basically like PayPal on steroids, it's down over 63% from its high, basically closing around 300, and now it is in the 100 to 110 mark, recently up over 120, but yeah, around 100 to 120 at the moment. This stock is led by Jack Dorsey, the ex-CEO of Twitter. So he's a guy that I personally do like. Jack Dorsey, I like his kind of views and how he's kind of open to trying to concentrate on blockchain, all that kind of stuff. So Square is just like a hyped up community version of PayPal, but they do command the most downloaded financial app in the US, the Cash app. So this stock is getting absolutely hammered at the moment. Can't catch a break. Its earnings are going to come out in the next 2 to 3 weeks, and we'll see how they do. We'll get a good feel of how they're going to grow, especially as Jack Dorsey changed it from Square to Block. He wants to focus more on blockchain technology and how they're going to adapt that more into make the company more profitable. That is going to be something that we will see in this earning report, and it'll be very key to see how their forecasts are. Block is a company that I do personally own, and I am buying it at the moment. I do think it's a good one for the future. I do really prefer it over PayPal, but it does become with additional risk. But I think just because of the age that I am, the position I am, I'm going with Block instead of PayPal. So that brings me on to the third stock, and that is Zoom. So Zoom is not a stock that I do actually own. It'd be interesting to see how this company does perform over the next year or two. It is down from 450 a share to now, 140, 150. So this stock is down massively. There is potentially an opportunity here, but obviously it comes with its risks. It's getting additional competition from the likes of Slack, Microsoft Teams. Zoom is potentially going to be fighting on all sides. Look, it's a video conferencing software. Obviously, they can probably try to go into more different directions. So if you want to look at Zoom, it's would potentially be a good one to look at. The valuation is way down from where it was. There is potentially an opportunity here for them to be growing their revenues highly and stuff. So look, it is one to look at if you do have a bit of a risk tolerance as well. It's not one I'm personally buying, but it is one that you can definitely take a look at. It's down massively from its highs. Look, it does come with a lot of risk as the competition in that space is getting pretty high. So that brings me on to number 4, which is Shopify. So Shopify is absolutely crazy. If you look at their earnings last year, they're absolutely massive earnings. Some of the earnings were even higher than the revenue, which is crazy. Absolutely crazy. So their PE on this is pretty okay. It's not too expensive at the moment. It's trading at around 100 billion market cap. It's growing massively. There's over 1 million stores use Shopify, and we use it ourselves, and we know how good it is. It's an absolutely fantastic app. We couldn't really be asked for any more. So as they do say, invest in companies that you do use. So Shopify is not one I currently own. I am looking at it. As soon as I can free up a bit of money, I will be looking at getting into Shopify. I do think it's a great one for the future. Their website and apps are absolutely fantastic. So they're definitely one to consider. And it is down 50% from its high. So it was trading at around 1600 and now it is in the 800s. So it's definitely one to consider looking at. If you are a fan of e-commerce and know how it works, you know how Shopify works, know how it operates, it's definitely a stock to consider potentially adding to your portfolio as well. So this brings me now onto the one that is the biggest decline that I have in this group. So number 5, it's C3AI. So this stock kind of came to my attention as I think artificial intelligence is going to be a huge thing in the future. I made a previous video on this stock as well. And when I made that video, it was trading in the late 20s, maybe low 30s, and now it's trading in like 24 to 25. So I am down on this position, but I do believe that this is a stock for the future. I do believe that it will advance. They've got a good few deals in the pipeline, and with Baker Hughes and the Defense Department, it's definitely one that I think is going to expand, and it is down 86% from its high. So it went up all the way to 176 at its peak, and now it is down at 24 to 25. So I think this stock potentially does have a lot of room to run. AI is not going anywhere. Like artificial intelligence is definitely the future. So it is one I think to consider adding. Like it's run by Thomas Siebel, and he's one of the best people I think to be running a company like this in the AI space. I know there's going to be a lot of competition, but like if they can get into their product is very sticky, so it's difficult to leave if you do sign up with them. And I think I think C3AI is definitely a high risk, high reward play, and it's one that I am personally invested in. Okay, and this brings me on to my last one. So number 6 of this, and it is Revolve stock. So Revolve is a stock I actually took profits on at the beginning of the year when it was trading in the 80s, and now it is down 37% from around where I sold it at, which is pretty crazy. So this stock is now coming back into buying range, I think, for myself. It's a great company. It's an online retailer for clothes. They take really good advantage of influencers, and that's how they do a lot of their marketing through that way. And I think this is a great company for the future. As things get more open this year, I think we're nearly getting to the end of the COVID kind of cycle, and people will be wanting to buy clothes, want to be going to festivals, want to be going out to dinners. It's going to be more and more relevant. I think they've got good growth numbers. They've got 2 good guys running the company as well, and I think it's definitely one to consider. So look, guys, I just went quickly kind of through some of the stocks that I'm potentially looking at, some that I do own and I'm adding to. I think these stocks are, as a group, are pretty good ones for the future, and they're down massively from their highs, and they're pretty much, I think, are all in buy ranges. But obviously you have to accept that there are risks with all these companies. There's obviously the market risks. There's a lot of fear out there at the moment. Things have started to settle now again in February. But look, there's a lot of fears out there with inflation, government debt, Obviously, it's like supply chain issues, which are starting to ease. But yeah, there's a lot of fears out there, and they don't come without their risks. All of these companies come without their risks. So what is really important to look at is when these guys report, is to look at their forward-thinking statements. PayPal came out and people weren't too impressed with the growth numbers, but I think once the eBay stuff is cleared for them, they will get back to a good growth level. And I think the rest of these guys, we'll have to just see how they report to see what their forecasts are, and we'll get a good estimation of where they are going to be going. And what we were looking for is to see upbeat forecasts. So basically any company that's coming in with an upbeat forecast at the moment is getting rewarded massively. So guys, I hope you enjoyed this. I hope we gave you some sort of ideas, some companies to look into, but just remember, this is not financial advice at all by any means, and do your own research when looking into these stocks. So guys, make sure you do hit the like button, hit the subscribe button. You check out our sponsors of Caffe Pompeii and 35mm Vintage down in the description, and we will see you in the next one. Bye-bye.